Hi, I'm Peter O'Grady. Today I'd like to talk to you about development finance. This is a question we get asked frequently. What is the difference between development finance and a commercial mortgage? Development finance is where an individual or company are looking to develop a property or properties and have some capital and need a short-term loan, normally between 12 and 24 months, to help complete the development. Whereas a commercial mortgage is normally required when the above development has been completed and they need a longer-term commercial mortgage in place to replace the existing short-term loan. Development finance is required when a client is building a property and there is a funding gap. Funds may be required to cover some of the following costs: the initial purchase of the land plus all the build costs for the development, plus labour costs and any interest charges that the client has to pay whilst the property is being developed. Development finance is available whether your clients are a small property developer building 2 units a year or a sizable company with a number of schemes. We have access to lenders willing and able to offer flexible terms. Development finance is a very specific type of finance. Whilst the high street lenders are active in this market, their terms may be restrictive. Therefore, there are a wide range of development finance specialists lending in this market. Short-term development finance is usually required from a specialist because most bank and building societies will not provide buy-to-let mortgages until the property has been owned for at least 6 months. Most bank and building societies will only provide a buy-to-let mortgage if the net rental covers the interest payments by a factor of at least 125% for residential and 160% for commercial. Most bank and building societies will not lend on unoccupied rental properties or properties that require renovation work prior to being put on the rental market. Once the property development has been completed, we should be able to support the client in obtaining a long-term commercial mortgage to replace the development finance, or the client may simply want to repay the development finance lender out of the sale of the proceeds. So what the client benefits? Development finance can be raised quickly. Each case is assessed on its individual merits. The development lender will be on hand to support the client with advice on their development throughout the process. The same person who authorises the funds will work with the client to manage throughout the development programme. Here is an example of what type of funding is available for the smaller developer. Commercial property finance available on both residential and commercial properties. Finance from £50,000 to £5 million, up to 55% of gross development value. As always, it's advisable to speak to a professional expert when making any financial decisions. So speak to a professional when seeking any commercial mortgage advice to ensure that you get the best commercial mortgage rates for your personal or company circumstances. To get help today, complete our online form at justcommercialmortgages.com and you'll be put in contact with a commercial mortgage expert who can answer any questions you have and take you through all the options to ensure you find the best commercial mortgage rates available in this marketplace.